Welcome to today's episode of the Market Replay Live podcast. In this episode, we're going to interview Max from New Capital FX. New Capital FX is a Forex firm based in the Netherlands. And in this episode, Max does a great job of explaining his trading edge of how he is able to trade imbalances in the market as opposed to using things like technical analysis and support and resistance. There's a lot of great information that he shares in his podcast for Forex traders, and I'm excited to dive in. Hey Max, great to meet you, sir.
Hey, thank you for having me.
Of course. I've been following Capital FX. I love what you guys do. You guys do some great things in the Forex market, and so I'm just excited to get you in to kind of ask you some 20 questions. So you ready to jump right in and get started?
Yeah, sure. Let's go.
Let's do it. Okay, so first question for you, Max, is when did you start trading?
So I became interested about the financial markets in more or less 2015. So that's more or less 5-6 years ago. And from there, like the first year was just trying out, is this something for me? And from there, I really digged into it. And after more or less a year, I figured out, okay, I really want to get started trading.
That's good. So what frustrated you most, would you say, about learning to trade in the beginning?
More or less, I didn't know where to start. I was trying like everything. And of course, I was joining everyone on social media. And the biggest frustration for me was that everyone was telling different things. And there was more or less no place to really learn a mechanical style of trading. Everything was just subjective. And that's really the most annoying thing for me to get started, because I really need a step-by-step plan to execute. And that wasn't more or less never being provided by someone.
So with that being your biggest frustration, what would you say was your process for finally getting consistent then as a trader?
Yeah, so I started with trading more or less a subjective approach, like support and resistance. And when I started to really dig into that issue of just placing lines everywhere without a really structured approach to it, I reached more consistency with just first my approach, not consistently profitable results yet, but really the approach needed to be more mechanical. So we discovered a way to, instead of draw support and resistance lines, to really look at order flow and have a really consistent approach to the markets to look, okay, where are the reversals in the markets or the opportunities in the markets? And from there, okay, now we have a spot to look at instead of being all over the place in the charts, of course. And from there, I developed a strategy to capitalize on those areas in the markets, if that makes sense.
It does. And it actually leads great into my next question, which is, so you say you went from just kind of shooting in the dark with support and resistance to a more mechanical approach, and you developed your own system. So how would you define that system? Or more importantly, how would you define your trading edge?
So that's an interesting question, because we then first have to look at how the strategy more or less works. And that is, we are looking for imbalances in the markets. So let's say you check a daily time frame, a daily chart, and then we wait until a certain pattern develops, like an imbalance candlestick. And that's like a doji candlestick. So for the people that know what that is, it's like a really small body candle and a big wick at it. And from that imbalance candlestick, then we know, okay, institutions are really looking at this price area because there's an imbalance in the markets. From there, there's like a really big move happening. And if that pattern happens, then we draw our zone, and then we have an area to look at. And from that area, it's a proven edge to have. That price will reject that area almost always. Sometimes a big move, sometimes some small moves, but that's more or less my edge in the markets, knowing where the institutions are likely to take profit or maybe get into the markets for a big move.
I see. So focusing on those imbalances is what you look at. You may not know exactly how far that it's going to go, but you know that that's a great place at least for you to begin to enter or look for opportunities to take trades.
Exactly. Yeah.
Great. So That is on the mechanical side of how you would define your edge in terms of what the market is doing, which is important. But another great area that traders need to know in terms of how to define yourself as a successful trader is what makes you tick as a trader. So for you, my question would be, what qualities of your individual personality do you feel has helped you to become a better and more consistent trader?
I think that's primarily the discipline you need to follow the mechanical approach. Instead of being drawing all those lines on your chart, you really need to stick to one approach. And that's really difficult, of course, if the markets aren't really doing what you expect them to do, but just stay disciplined and keep executing your plan. That's more or less the biggest and the best quality you can have, in my opinion, with trading, that you are disciplined enough to follow one strategy, not fly from one strategy to another when 1 month is not good. That's more or less my quality, is that I'm really disciplined in my routine overall beyond just trading. And therefore, I really want to promote being disciplined in the markets, follow your rules, know what your rules are, test your rules. Otherwise, you will not follow them. And yeah, that makes you a better trader.
Yeah, staying consistent and following rules are incredibly important. So those are my questions that I have for your background. Now I kind of want to jump into a little bit more about your method to the madness for your trading. So, with New Capital FX, it's obvious you all trade Forex, but do you have a favorite asset class or a favorite Forex pair that you like to trade, and then why?
I don't have a favorite pair to trade. However, I do have a few pairs that I don't like to trade because they're just too choppy, or the moves are not really working for our strategy. So we backtested for a lot of years, like 15 years of data. We backtested those zones I talked about, those imbalances. And then I discovered, okay, these pairs work better than the others. So we filtered out those. So I don't have favorite pairs. I'm just trading like all the Aussie pairs, all the major pairs I trade. And besides that, I love to also watch the DXY, so the dollar index, because that helps me seeing, okay, where's the dollar moving? And then, of course, you can use correlation analysis to really spot, okay, Aussie dollar is in a nice area of interest for me, for our strategy. Then the DXY is likely to be there too. Euro dollar might be there too. And if that all aligns, you can really get a nice big position on like the dollar index in general. But besides that, no favorites, just what works, and the other ones I skip.
Got it. So in that similar vein, if you don't have necessarily a favorite instrument to trade, do you have, let's say, an ideal market environment for your trading method? And then if you do, how do you determine that those market conditions exist?
Yes, I do have the best market condition for us is like a trending market. However, that if the market is really strong, like you have a really strong trend to the upside or the downside, doesn't matter. When that occurs, then we know that the pullback will also be bigger. So when a strong move happens in the market, like Aussie dollar is trending up for a while, so the last few months that happened, okay, now we know this pullback for Aussie dollar or general Aussie pairs is bigger, and therefore we are now, for instance, in a short on the Aussies, because we know this move will be bigger than others. So more or less a trending market is the best environment for me. How you define a trending market is sometimes difficult because in hindsight, you of course know, okay, this is a good market environment. But when it is happening, sometimes it is difficult. And then you will just figure out, okay, some setups don't play out because we are in this market condition. But really knowing this is a trending or this is the perfect market condition is really hard to define, in my opinion. However, if the moves are really strong, like the engulfings are really big, or just in general the candles are big, then you are almost always certain that you are in a big trending market. So that's what we use.
I see. Searching for the trends that are in your favor. That works. So you have your method. You have your ideal market environment in terms of that the market is trending. Then my question is, how do you determine or how do you calculate the size of your position? So how do you determine your lot size or how much you're going to risk on any individual trade?
Yeah, so I have an app called Stynu on my iPhone, and that's an amazing app in my opinion. I'm not promoting it, but it's just an app that really helps me to calculate lot sizes. So I always have like 0.5% risk per trade. But for the people that use 1% risk per trade or more, you can just put that in your calculator, and I know my stop loss always. So you can use your stop loss, put it in that app. You can also use my FX book, I believe, calculator for lot sizes. Those two methods is what I use for my position sizing, and of course, always small risk per trade.
Sure. So when you say 0.5%, you mean 0.5% of the size of your account?
Yes. Yes, the size of my account.
Okay. Okay, that's interesting. So we know, based on your answer, what your stop loss is and how you determine how much you're willing to lose. What is your strategy for figuring out what your profit potential is going to be? So do you set a profit target before you enter into a trade? Do you allow trailing in your methodology? Like, how does that side of it work?
Yeah, so we have three strategies on top of, like, if we have a daily prediction, like we are looking for shorts, we have three approaches to potentially capitalize on that short position. The first strategy is more or less the first entry, and we enter that on the 4-hour time frame with a fixed risk to reward. So 1% risk, 3% target, or in my case, a 0.5% risk per trade, and then a 1.5% target. So always win 3 times more than you lose. That's like the first strategy. The second strategy and the third strategy is later when we see that the move is happening, then we enter those strategies. And those strategies have a trailing stop loss. So we wait until like the 1-hour high is broken if we have a long position. And when this high is broken, we trail our stop loss. And that we keep doing that so we don't give back a lot of profits when price starts to chop around. And that's more or less our trailing stop loss rule. So we try to use both. We have like the fixed risk to reward, the fixed target, and of course the trailing with the other two strategies.
Great. And so you have those strategies for setting your stop loss, for your take profit. How do you determine how am I trying to say it? Like your profit goal? So do you have a daily goal, a weekly goal, a monthly goal, or is it just whatever opportunities exist, we're going to take them no matter how much we are currently up or down when we're trading?
Yeah, so with goal setting in trading, I find it really difficult to set goals like monetary goals or percentage goals. My only goal is to not break my rules. I see my strategy as not predictable when it happens. Like sometimes you have 10 trades in a month, sometimes you have 3, sometimes 0, sometimes 15 trades, you don't know. Therefore, I find it really difficult to set those goals. Instead, what I do is, okay, did I execute my plan correctly? Did I break my rules, or did I miss setups? Because sometimes you miss setups. We trade 24 hours a day. So then, of course, you have to sleep. If you miss those setups, note that down and make sure that you have a reason for missing those trades and see how those affect your month or your quarterly results or your yearly results. So that's what I do.
That's great. And I'm really happy to hear that. One of the great things that I've been able to get value out of from doing this podcast series is being able to talk to successful traders. And each trader that I've talked to, when I ask them this question of do you have a daily, weekly, or monthly goal, most times they give a very similar answer to the one you gave, which is, I don't know what I'll be able to make in a day, a week, or a month. My goal is only to be disciplined and to make sure that I'm sticking to my trading rules. And so to hear you say that is just putting you in that category of people, which means obviously you know what you're doing. For some of the newer traders that kind of have the monetary goals, this is an opportunity for you to see that it's about discipline. It's about making the right decisions. It's about controlling what you can control, as opposed to thinking that you can make a certain amount of money from the market, because the market may not have the conditions for you to be able to do that on a consistent basis.
Yeah,
so
exactly.
Really good to know. Really, really good. Okay, so let's jump now. It's a great segue into kind of trading psychology, or, understanding kind of what makes you tick as an individual trader, not on the mechanical, clicking the trades or making those opportunities, but more for you, how do you define success as an individual trader?
I define success in the markets by, of course, making profits, but not like seeing it on a monthly basis or a quarterly basis, but more like a long-term approach, being disciplined, following my rules, testing what I'm doing. So if I want to develop a new strategy or improve my strategy, that I really dig into the data, analyze all the previous years, and be disciplined in doing that, not just expecting, okay, this might work because I think so. No, really go into the data, be a data analyst instead of just a trader. And that's more or less instantly linked to psychology, in my opinion, because if you really trust your data, if you really trust your rules, then of course you will be disciplined, because you don't want to be stupid in the sense of breaking your tested rules. So that's how I define success, with that approach of being disciplined, like I previously discussed already. Besides that, always evolve with the markets, always keep learning new things, always be ready to adapt if needed. Like the last few months, the strategy did some crazy things, then okay, reflect on that. Can we capitalize more on those moves or not? And that's really how I define that.
So let's keep it right there, because you said something interesting there. You said that your strategy did some crazy things, and so this kind of leads me into my next question, which is sometimes you can have discipline, you can have a plan, but we all know that no plan is going to survive whatever the market decides to do. So let's say there's an instance where you are making several decisions in a row that have led to losses. What are some of the things that you do to mitigate or to handle when you're having a losing streak or consistent losses in a row while trading?
Yeah, so when a losing streak happens, know how long your losing streak can last. That's the first thing. Calculate your probability of being right, and then see, okay, with this strike rate, which I have proven over the last years or in my career, know what the probability is that you have a losing streak and how long it will last. Like if you have a really high strike rate and you have 15 trades in a row that lose, there is something wrong. So that's the first thing I try to define is, do I have a losing streak? Okay, fine. Is this between the boundaries of the strategy, or is something new happening? Like sometimes you have the probability, you have worked everything out, but still your losing streak is bigger than you expect it to be. If that happens, then you really need to think, okay, now something is happening that I didn't expect to happen. It's outside of my boundaries. Now I have to backtest again, see where something is wrong. Is this new data or is this old data? Is there something I can do to change? If your strategy is between the boundaries, I don't think you can change anything. It just is part of the plan and the probability, of course. So I don't know if that answers your question correctly, but that's how I handle a losing streak, because there's not much to do besides that.
Sure. I mean, looking at it from a technical side works. I'm asking specifically like how you can deal with it and how you can mitigate it, because every trader is different. So, but although you gave me a technical answer, that's great, because this next question then leads to a more psychological, emotional based answer. So whether it's a losing streak or anything else, my question for you is, in times where trading isn't working out the way that you may have forecasted out to be, or those sorts of things, how do you deal with things like frustration, self-doubt, or the inevitable negative emotions that creep up while you're trading?
So when it happens, when I am in a losing streak, I try to focus on other things in life, just work out a lot, focus on the health, stay disciplined, keep showing up to the markets, but don't really try to think too much about it. Focus on those boundaries. And if everything is correct, it's just sitting out the losing streak, and don't really worry too much about it. I used to do that. And if you do that, it's just going to affect your trading approach also, because maybe you're going to look for new setups or new things. Don't do that. Just focus on your general life, enjoy yourself a bit, and make sure you trust the process that it will be better.
Trust in the process is the most important piece, and it's what most successful traders say. So, what is your process then to prevent, let's say, like over trading or possibly revenge trading when you do find yourself getting in a slump?
So that's mostly based on experience in the markets, that you just discovered that over trading or revenge trading is not a smart thing to do. So if you do that at the start of your career, of course I did, and you just learn from it, because you lose money by doing that. You don't have a plan, and that's just experience talking. I think that you will know that when you feel like, oh no, I missed the setup, or I want to get my money back, it won't play out. So just focus on the other things in life. Go away from your screen. I only check the markets every 4 hours. So that's a really passive approach of trading, in my opinion. I don't sit at my screens the full day. And that is how I also prevent over trading and revenge trading. I'm not at the charts all day. I'm not there, so I cannot trade.
Yeah, that's a really important point. Being able to get up and walk away from the charts will save you so much heartache, pain, money, and so many different things. Just being able to take a break and see that there are things definitely outside of trading. So that's great advice to give to someone who is looking to figure out, okay, in what ways can I ultimately become more consistent as a trader? So thank you for that. So with all of your experience so far and the methods that you've created in terms of how you've helped yourself and others to become consistently profitable as a trader, what would you say is still your personal hardest mistake to avoid while you're trading?
What my hardest mistake is to avoid while trading? Can you explain that question a bit more?
So I'll give you an example from my own life. So I find that in times when I am up big, there are times where I will be able, I would still want to be able to add maybe a little more risk, let's say 20% more risk than I would because I'm up, which isn't the most disciplined thing that I could be doing. So that's one of the things that I want to begin to change. Like no matter how much I am up or down, I want to be able to keep my risk in a range that I have defined beforehand, not necessarily how it's on my profit and losses. So for me, there's still issues of discipline in that regard. So I'm kind of asking, even with all of the systems and things that you set up, are there still things that you do that when you do them, it kind of annoys you? Like, I need to get better at that at some point.
Oh yeah, definitely. So I know one thing, and that's if I'm like taking a lot of trades in a week, and that's for our strategy pretty rare, then I'm gonna think like, okay, is this still right and a valid setup? And then I check it, of course, if it is. But it's still hard to then execute a trade because you have a lot of exposure in the markets if you have like a lot of trades open. So then sometimes I want to tweak my risk also, and really think, okay, can I skip this setup? And I know that I really need to take it. So I just, I blindly execute it, but it's really a discipline thing that I still need to solve. And I have had this for more or less a year, 2 years with this strategy. So that's definitely something I will work on to be more disciplined and just execute blindly. But blind trust is sometimes really difficult to manage, especially in harder times.
For sure. Okay, so Max, thank you so much. We've been working on this. We're on the final stretch here. We just have a few questions left, and these questions are great. So my first question for you now in this final stretch is, can you tell us, in your opinion, what's the best trade you feel you have ever made?
Yeah, so there's one trade that more or less happens every year. So I think everyone will love to hear that. And that is around the 19th of December, every end of the year, almost every year, based on the last 20 years, there's a trade on the gold markets. And that's a gold long trade. So you buy gold, just gold dollar, for instance. And almost always there's like a really big 100-point move happening from the 19th of December, more or less there. So if you watch the charts, I believe a lot of people will do now, and just go to gold and see what's happening every December. So last year it wasn't a really big move, but all the years before that it was a really big one. So in 2019, that is more or less my biggest trade ever, because I knew it was going to happen. I scaled in with normal risk management. So just buy, wait until price moves up, trail my stop loss to break even and add again. So always a fixed risk percentage was open. And besides that, yeah, if you just keep stacking that, it's a really big trade to take. And that was definitely my biggest in 2019.
Gotcha. So the gold trade in December, which I definitely know of, would be a good one to take in terms of your best trade. So on the flip side of that, what would you say is the worst trade you've ever made?
My worst trade ever made. So that was at the beginning of my career, more or less. And that was when I was expecting the dollar to explode against the euro, even though the charts were telling me like the opposite thing, that it will happen. But I was also reading a lot of fundamentals that Europe was being having a hard time, and I was just positioned in one big trade based on fundamentals instead of technicals, and I just ignored those technicals. And when it did play out the other way, I was losing way too much money than I would if I just followed a technical approach and a technical trading plan. So that's definitely my worst trade, to focus too much on what you see in the news and hear about certain fundamentals.
Sticking to fundamentals is important. Okay, so if you could, let's say, Max, start over trading tomorrow. So not having any of the knowledge that you've accumulated, you're basically just starting over. Knowing what you know now as a successful trader, what would you do differently today?
I would definitely not trade the old approach I was trading at the start of my career. Like, I was the first year, I didn't have a strategy, didn't have a mentor or anything. I was just checking the internet for everything I could read. And I would save a lot of time if I just went and looked for a more mechanical approach of trading instead of doing everything at once. So if I could start tomorrow with zero knowledge, I would then definitely try to just, if without a mentor or with a mentor, just watch the charts and try to see one key pattern in the markets and just focus on that, test that, and really don't just jump into the markets, just test that pattern, work that out, make a strategy, make a plan, make sure it works or that you know that it works, and move from there. Just take it step by step instead of doing everything at once.
Yeah, that's great advice. Sticking to one thing that works, especially in the beginning, whether it's your first year, your first 2 years, even your first 3 years, just finding something that works and you can be consistent at is much better than attempting to try any number of things, multiple number of things that really do work. Because if you can just find that one thing that works, then you can make a good living as a trader. You don't have to have all of the new bells and whistles and all of the new tools. Just find something that can help you to be consistent. So that's definitely great advice. Great advice. Okay, so let's say, Max, we were having this conversation a year from now. So it's a year. It's February 2021, and now we're doing this podcast over again. What would you say would have to happen over that last year for you to be happy with the results from your trading?
I would say I will be very happy if I close every quarter this year in profits. So I wouldn't really care about how much profits it was, just a percentage based, which aligns with my strategy, of course. It won't be 100% per quarter, of course, but just a good quarter every time. That would make me really happy as a trader, because it also tells me that I followed all my trading rules. It aligns with the strategy, and I'm just know again that I'm really doing what works, and that I need to keep following this process. That would make me very happy.
That's great. Well, Max from New Capital FX, I want to thank you so much for taking this 20 questions interview for the Market Replay Live podcast. I just have one question left for you, and it's, do you have anything to tell the people? Can you let us know what's going on, where we can find your things so that we can check you out?
Yes, of course. So our name is New Capital FX on Instagram. So of course you can follow me there. There I will be actively posting charts, lessons, but also if you're interested in learning more about our style, of course, you will see a link to our course there. However, if you just want to see the process beyond just trading, also the routine of life, just being disciplined, of course, you can find us there and follow me there on New Capital FX. And from there, you can also follow me on my private Instagram, which will be linked there too.
Great, thank you. And we'll make sure to put all of this information in the show notes for this podcast on top of the URL to be able to get to the New Capital FX website. Okay, so that concludes another episode of Market Replay Live podcast. Max, I want to thank you so much for agreeing to be interviewed.
Thank you. Yeah, it was a pleasure.